So we are covering the South African national budget, which has just been presented by the finance minister. I'm already seeing here some summations coming through on Twitter. Maya Kruger says the SA budget came with no surprises. Government will use the cash that it received from mining companies paying more taxes due to higher commodity prices to reduce its borrowings. And she says this is positive. Anyway, let's continue that coverage now and call in our experts who have been listening to the minister and getting their thoughts together. Introduce again Annabel Bishop, Chief Economist at Investec. Thank you, Annabel, for coming back. And we also have Billy Jobert, Senior Associate Director at Deloitte, joining us for this discussion. Later on, we'll be joined by Dr. Nthabiseng Moleko, Development Economist at the University of Stellenbosch, and Ian Scott, Head Fixed Income at Momentum Investments. Let's begin, Annabel, with a summation of the budget. At the beginning, I was going to limit you to just 2 words or 3 words. In your own words, how did you do it?
I actually think it was a very good budget, and I think it actually exceeded market expectations. And you've seen the rand certainly move to 14.40 to the US dollar as a consequence. And of course, this is really with markets seeing the borrowing projections coming down substantially from what we previously estimated. And of course, as well, the fact that the peaking in the debt trajectory will be much lower now, at less than 90%. Previously, you recall, we were talking, Godfrey, of being over 95%. And of course, that was a big worry for credit rating agencies. So we believe that this probably removes the chance of any credit rating downgrades in the first half of this year. South Africa, we believe, will probably not see its ratings downgraded if it persists in this type of good fiscal trajectory going forwards for the second half of this year. Whether we actually remain on negative outlooks, however, will depend on, as the credit rating agencies see us progress through the year, on whether we actually start achieving many of these objectives that we have laid out. So, of course, there are lots of positives and lots of other areas to discuss, but of course, also as well, showing the government is quite certain about wanting to achieve fiscal consolidation by dropping the primary deficit down towards 0% as well in its estimation. So, I think what's key, Godfrey, is that revenue overrun is quite close to what we thought, around 100 billion. And of course, also that puts some leeway into, government being able to pay for the rollout of vaccines as well. Obviously, this rollout of free vaccination for the population, very key as well to the economic recovery.
Absolutely. Let me take in the thoughts of our panelists. So, Billy, let me come to you. Your thoughts, many people before the budget came were saying that there would be no new taxes right? And also not many big tax increases. What did you see?
Yes, I think that's correct. And in fact, what we're seeing is a decrease in the corporate tax rate to 27%, which I'm very excited about because I think it's a meaningful statement of intent to try and attract investment. And we have by no means a low corporate tax rate, so reducing it to 27%, which will happen, from 2022. So we have to wait for it for a while, but I think it's a really positive step. As far as individuals are concerned, the brackets are being adjusted by 5%, which is a little bit more than inflation. So I think it's a very conservative approach to tax. I think a recognition that fixing our problems and our debt levels really doesn't lie in taxing people or companies more heavily. We need to grow the economy and cut public expenditure. And so I think generally it's a very encouraging message from a tax point of view. The only thing really going up more than inflation is excise duties on tobacco and alcohol products, which are going up by 8%. And otherwise, I think it's a very conservative and measured approach to the tax situation.
Interesting, and interesting that is hitting an industry that had also been hit by the lockdown regulations, but we'll come back and talk a little bit more about that. By the way, I like the way they wrote your name on the wall there. They thought we might not be able to spell your name correctly. Let's go to Nthabiseng. Nthabiseng, your opening thoughts in terms of that overall budget that the minister presented. The markets people seem to be liking it. What about you?
Well, my view is very. I'm not really taken by it, to be honest. The fundamental reason being that South Africa has had, beyond just looking at the outlook of debt and improving our thresholds in terms of debt to GDP, which is important to look at because we must all agree that it has a recessive outcome at a certain point if you have unsustainable debt levels. But the problem that South Africa really has had is the issue of not only revenue collection, but really lack of output being generated from subsectors and economic activity. And I think that hasn't been sufficiently dealt with. How are we going to drive an alternative economic trajectory that enables us? We had yesterday the unemployment numbers coming out at 32%, but the real broad definition is at over 42% unemployment. Youth is hitting at around 60%. There's no real decisive strategy that I've heard in terms of how we're going to change the long-term development path of South Africa. Pre-crisis levels of growth of around 1% are inadequate. We can't be talking about a 1.9% growth for the next 2 years and a 7.2% contraction as though that is acceptable. And I think for me that is a serious concern, even though we may park off rating agency downgrades, which is a good thing because we have foreign debt. But the problem is that we have to change the growth trajectory of South Africa. And I think for me, that is the real problem that we need to deal with.
I'm going to come back and we're going to interrogate that a little more because I thought one of the things that I was encouraging was the fact that there was that surprise tax cut from 2022, which obviously will have an impact on growth. But I'm reminded of a comment that was made by Isaiah Mhlanga on one of these shows here on CNBC Africa, where he said, what will solve a lot of the government's problems, including debt, is growth. And you're right, Tabi saying he needs to find answers to growth. Let's bring in Ian Scott. Ian, I'm looking at that rand and I suspect I see you smiling.
Yes, thank you. I think I'm wearing my bond hat, and I think it is a good budget for the South African bond curve. The borrowing requirement going down to about 380 billion for bonds. The total borrowing requirement, from over 770 billion to around 540 odd billion. So this is a good number, and people will say, well, how does it affect us? Well, remember, the interest rate bill is the fastest growing component in the budget. So if we borrow less, we have to pay less coupons. So that from an expenditure point of view, that's good. For the bond market, it's good. Remember that in the world, yield curves are very flat. And our curve is very steep. So we've got a huge borrowing cost at the moment. And I think from a budget perspective, if we can just get that trajectory down, that debt to GDP, down to the 89 and even lower.
Yeah.
Now that's good for South Africa. It's good for the bond market. It's good for the expenditure on interest rates. So, yeah, from a markets perspective, we've already seen the curve likes it. What we call the long end of the yield curve has rallied quite significantly.
Yeah.
Means there will be less supply to the market, which is a good thing because we've probably been issuing too many bonds over the last couple of years.
So what is that rand celebrating? Sorry, I just wanted to follow up and ask what is the rand is celebrating, because we did see a very sharp move indeed after the minister presented the budget.
Well, think about it. If more debt means more pressure, means foreigners could sell the rand to get out of. Remember, they still hold 30% of our bonds. Now it means, well, foreigners might come into our market because there'll be less. There's a scarcity factor, so maybe some of the concerns will be less. So less pressure on the rand. It helps.
Yeah. Annabelle, let's examine what the minister said about addressing the issue that Tapiseng raised, the issue of growth. And as I was saying earlier, one comment that I got from Isaiah was that, when you look at it overall, really, growth is what will solve South Africa's big debt problem. Did you see any evidence that the ministers are addressing the growth issue? Yes, we got the tax cut. What else?
Well, there's certainly, a planned shift in expenditure away from consumption towards investment. And of course, that's very positive from an economic growth perspective always, particularly when you have very high borrowings like South Africa has, because obviously borrowing should be used to fund growth enhancing initiatives, which obviously are very key. Fixed investment is very key in the economy, but which obviously, pull the economy down when borrowings are used to fund current expenditure. And of course, in the South African economy, borrowings have, in the past decade or so, increasingly been used to fund current expenditure. And that, of course, is not just your servicing costs on your debt, your interest payments, but also, of course, as well, civil servant salaries and wages, social welfare, and of course, even, purchase of goods and services. So all of that, dropping the primary deficit, I said earlier, down to 0% is extremely positive, because that's in a stronger state, because what we really want to go for, I know it's not the best budget at the moment, but look into where we eventually get to as the good budget, and that is to obviously drive us into substantially faster and stronger economic growth, so we have the money available for greater largesse when it comes to social welfare, to uplift the majority of the population, eventually bring them into the formal economic net through all the programs aimed at childhood development, and of course assist the unemployed in other areas, but particularly for the South African economy as well from a developmental perspective. It would have been a crisis if we had moved towards a debt default. And that is what we were moving towards. It's a crisis for the South African economy if we had turned into Zimbabwe and Argentina, Ecuador. And that, of course, is what we are rolling away from. And I think, that is something which requires hard medicine to be taken at the start so that we can have an easier time later. But what I really wanted to talk about also as well, of course, is the fact that the currency has strengthened so substantially. And of course, that really indicates to me that the budget was much better than the markets expected. So better from a borrowing trajectory and of course also the fiscal deficit trajectory, but also the corporate taxes. Let's not forget that the cut in corporate taxes does also help in terms of alleviating some pressure, because we are way above, and this is quite important, the corporate tax rate for many other countries in the world, even for the norm. And that obviously makes us less competitive. And the less competitive your economy is, the more likely it is to see these very slow growth rates. One of our colleagues on the panel was discussing earlier. So, by improving the ease of doing business, and of course by reducing areas that are uncompetitive in the South African economy, quickens your economic growth. And of course that allows you then to obviously have a more inclusive economic growth area as well. Sorry, one more thing, Godfrey, I just wanted to say that we were talking earlier about the 2000s and how, we saw unemployment drop towards 21%, and that was actually inclusive growth. I know there's some naysayers out there, and that, was not enough growth, but we believe that we'd continued that economic growth of 5-6% plus, and in fact augmented it with many developmental measures which could have been added as well. We could actually have seen unemployment drop towards 15% and actually be targeting the 10% mark. But we know the issues, electricity capacity constraints, and so many others. So I think as a starting point, it's a good budget, but market watchers are going to say, can it be achieved and can it be sustained?
For those, I'm going to ask Ntabiseng to respond to you on some of those aspects, because I also want Ntabiseng's answers in terms
I don't mean
of what...
to.
No. This is an exchange of ideas.
Yes.
Absolutely.
No,
but I'm going to come to you.
I'm not worried.
You're not
there
worried.
There is no issue. Thank you. I want to respond because...
Please.
Am I not allowed to?
You are.
Okay. No, I'm not responding to Annabelle, but rather to the question that was put to the fore. Is there really been inclusive growth? And also some of the issues that have been raised in relation to the budget. So I think the first that I want to come back to is 2009 drop in output, drop in all the economic indices, leading us to the path that South Africa is still on post. We've never recovered. The average growth in the last decade has been under 2%, average 1.8%. The reason for this is because of the growth path South Africa has had. We've had a very much a services-led growth path, not really an investment growth path. And I agree with Annabelle that we need to move towards productive investment using our fiscus for that. I think the problem, though, is that we haven't changed the investment pathways. So the capital markets, financial markets are still primarily investing in minerals, energy, and also financialization. So the South African economy hasn't been able to drive itself towards productive investment. And you see the outcomes of that with the deindustrialization and also the concentration of oligopolies, particularly in subsectors that are manufacturing value-added sectors. And so the result of that is this lackluster FDI going into investment pathways and capital going into your manufacturing value-added industry. That's number one. That's why you're not seeing labor absorption. I want to finish this point. The second one is on the macroeconomic reforms. They haven't been adequate to really quell and drive us towards transforming our growth path. We've seen a lot of micro reforms where you lessen the cost of doing business, but they don't really change the proportion of public investment as a level of GDP, but also the gross fixed capital formation going into reinvestment, which drives up your growth levers. And so these things show you that irrespective of whether we are driving this type of a growth path, we are not going to see a change in the economic pathways. And I think the hard medicine for us is to accept that, are we happy with the 2008 to now outcomes, with 11 million South Africans out of work, with the level of poverty at 50%? Are we happy with highest inequality in the world? Surely we cannot be. And we are not saying that it's good to look at debt to GDP, but all these other economic indices are showing lackluster outcomes. So I think The alternative is to say, how do we mobilize domestic resources to actually productively invest, but also expand some of these sectors to get out of the quagmire, win a crisis. And I don't think this is adequate to deal with it.
I'm going to try and answer you in part because the minister did announce in the budget statement that he announced today that he is looking at changing Regulation 28 to enable pension funds to invest in infrastructure. Isn't that part of that drive to try to raise the capital that's required to invest domestically? And of course, key is of course putting that money into the infrastructure sector where we know the returns in the long term are absolutely critical in terms of perhaps there not being the need to immediately focus on short-term goals.
Absolutely. I welcome that. That is an excellent.
What else should have been there, before you give your thought, what else should have been in that budget that would enable you to begin to think that the minister is focused on growth?
Okay, so the other thing that you can look at is the surpluses that come from the UIF compensation fund and other type funds where you have hundreds of millions that are not being utilized that can help us with the finance gap. What you do with that surplus is you reinvest it into productive sectors. Secondly, you've got to reinvent the wheel, looking at the incentives of the industrial programs to see how do we further industrialize, because the capacity is there. We've got economic complexities with South Africa's industrial history, but there's no redistribution really. I think the third element that I would say is the DFIs and the use of these capital formations. The credit guarantee scheme has not sufficiently added liquidity to those who are previously not able to access the current balance sheets of our big banks. So the take-up of 18 billion, which is 3.6%, is inadequate to reach those who really need it. So I think the review of that is critical. Regulation 28 is a plus, the review. I'm one of the proponents of infrastructure asset class, and I argue for that. It's much needed, and I definitely give the minister a thumbs up for that.
Yeah, I don't want us to detract from the budget, which is our main focus here today. But inside that budget also was mention of Operation Vulindlela. And the minister speaks about demonstrative progress that was made in accelerating the pace of implementation of our impact structural reforms. Annabelle, I want to come back to you before I move to the markets people. Your thoughts on the kind of changes the minister is anticipating in Operation Vulindlela. I know we spoke about it earlier and we have our doubts. For those who don't know, Operation Vulindlela is a joint venture between the National Treasury and the Presidency. I'm sure there are other components of it there, but in the main, this is directed at driving structural reforms. Annabelle, your thoughts in terms of whether we are beginning to see the fruits that the minister alluded to here and the impact potentially that you see coming from this going forward?
Yes, look, I must be honest. So before I answer your question, there's a massive thunderstorm about to happen. So I hope I don't lose connectivity. I hear a lot of crashes. But anyway, look, I think, as far as the program itself, and, I have to be honest, I haven't had a chance to go through the entire budget yet and read through that section. But I think it is absolutely key and critical for the development of our economy and our country, and particularly regulatory reforms for me are very, very key. And, looking at regulatory reforms in South Africa, we talked earlier before this segment, Godfrey, about the need for moving into increased electronic platforms in South Africa. We talked about e-filing. We talked about the Biz Support portal, which obviously reduces the time to create to bring a small business into being. And of course, the big worry in South Africa that many people have is that there is this bribery and corruption angle as well, which again also is reduced when you move to these electronic platforms. Again, the benefit obviously from Home Affairs and all of the other factors we talked about earlier. So very, very positive. I really do think that obviously the expansion and the capacity of the strait, again, very, very key. But I'm hoping you pass this question on to someone else, given, as I said earlier, that I haven't been able to unpack the fine details yet.
Yeah. Absolutely, I will. We need to get back to the markets people. Of course, they are celebrating because there have been good things in this budget. Billy, can I come to you and talk about the importance of that tax cut? Number one, it is on its own as a symbolic act, and then secondly, the practical impact of it on companies deciding whether to invest here in South Africa or outside South Africa, and of course, on local corporates.
Yes, I think there's a kind of carrot and stick approach with the speech and the supporting documentation indicating, on the one hand, we're cutting the tax rate. On the other hand, there's some quite significant things planned on the enforcement side. And I think from a tax certainty point of view, investors aren't deterred by the thought that there's an effective revenue service, whereas they are potentially deterred by a higher headline tax rate. So I think anything that we can do to narrow the tax gap, in other words, the gap between what should be collected and what's actually collected, is in all of our best interests. And I think there are three key areas there that they mentioned. The one is deepening technology and machine learning capabilities. So that's kind of artificial intelligence type of stuff. And my day job is actually transfer pricing, which is one of the other areas they're going to focus on. But we're having massive data submitted and exchanged between revenue authorities regarding multinationals via the country by country report. And the ability to digest, analyze, risk profile, etc., is key to effective enforcement. So I think that is a key aspect. The other one is specialized audits of high net worth individuals, especially those with complex planning arrangements. And there's
Go on. Okay, I think there's a storm in the background, and we seem to have lost Billy there as he was explaining the other various points. Let's see if we are able to get back to him. Billy, are you able to hear me? We lost you slightly.
Yes, I can.
There. Oh, there we go. Please pick up from where you were.
Okay. Sure. So I was saying that there's a focus on high net worth individuals. So if you're a rich person with highly complex structures, I think you can expect SARS to come after you. And they indicated that's going to start as early as April. And then thirdly, they're going to focus a lot on transfer pricing and BEPS. They mentioned that separately, but to a large extent, it's the same thing. And then that was lump transfer pricing together with a thing called tax crime, which I think is a bit extreme. But anyway, there's a strong emphasis in the budget on more effective and more automated enforcement of tax rules. So on the one hand, we're giving you a tax cut in due course. On the other hand, you'd better make sure your affairs are in order.
Yeah. That gap between the tax expected and the tax collected, how big is it? I know in South Africa we have one of the better tax collection rates on the African continent. I think about 25% of our tax to GDP is the ratio. I know in Nigeria it's below 10%. But how big is that gap here?
Yes, no one knows exactly. I heard a number this morning from someone else in the same game as me, which was 200 billion. That would obviously come in very handy if we could get anything like, well, even a fraction of that. I think it's also complex because there's a big informal economy, there's a big illicit economy. I think we had issues over the lockdown of certain, I was looking at excise collections, obviously the ban on alcohol products and tobacco for some of the time had a massive impact on that. And so the collections were just about half. So the budgeted was 48.8 billion, actual was 24.7. I think that's fair enough. We understand why that was done, whether we agree or disagree. But I think we also are aware that there was a significant, illegal or illicit economy that happened there, and some of that might still be happening. So it's probably quite hard to get a number on it. But whatever we can do to close that gap will really be useful for all of us as legitimate or compliant taxpayers.
Absolutely. Tito is very clever, of course. I don't know if you noticed that he used raw numbers, nominal numbers, to talk about the increases in the sin taxes rather than percentages. But now when you actually look at it on a percentage terms, it's double inflation, and he didn't want to mention that, did he?
Well, it's in the supporting documentation. They mentioned 8% increase.
Yes,
Whereas there'd been a lot of talk about the fuel levy going up a lot. They didn't specify a percentage, but I think that's roughly in line with inflation.
Sure. Okay. Ian, let's talk a little bit about the borrowing requirements. Did you hear any mention of a foreign bond here? Did he? I haven't read the budget statement properly, actually, I have to admit.
So what we've seen, it looks like they want to borrow about $3 billion annually, which makes sense to us. Remember, we still have a very low borrowing requirement in hard currency, so that's the one benefit that South Africa have. Remember, borrowing rates in global economy is very low. US rates are sitting at 25 basis points. So, I think it makes sense to tap the offshore markets a little bit. Obviously, it has risks for the rating, but so $3 billion a year sounds reasonable if you're borrowing 380 odd billion in the local bond market on an annual basis. It's also to put that point on the curve. I think it's quite important to understand that we also compete in that international market for borrowing. So we can't forever just stay away from that market. We have to have what we call a 5 or a 10-year point on those curves, so that your SOEs could also have a point on the curve. I know it's a technical thing, but it is important that South Africa borrows in offshore markets, so that the likes of a IDC or a DVSA or a Eskom can actually have a point on the curve in, let's say, in dollars or euros, where they can borrow, especially if we're going to go down this infrastructure route.
Is that a little like me needing to have a credit card so that when people look at my payment profile, they have an idea of my ability to pay and my...
Something like that. There's got to be a peg in the ground for South Africa. I think that's what's important when they do offshore borrowing.
Yeah. A lot of talk before the budget was presented was around the issue of the weekly auctions and the amount of money that the government was borrowing. A lot of commentators suggesting that that requirement is going to come down. I did see, I think, Peter Atad-Montalto talking about it coming down, I think, to about 5.5 billion rand. Did you see evidence of that in the borrowing plans that were outlined?
Well, we would suspect that the nominal bond auctions would probably go from 6.5 billion to around 5.5 billion, maybe a little bit on the inflation bonds as well. I think that what's more important for the bond market is that the nature of borrowing could change a little bit. There's been heavy speculation that long-end borrowing might actually be reduced in favor of a 5 or 7 or 10-year floating rate note in the front end of the curve, which makes a lot of sense for us. And we would support that. We haven't seen a floating rate note in the South African bond market probably in 15 years. So we're fully supportive of government or national treasury issuing a 5-year floater into the market. We think there's good demand from the pension fund industry, the unit trust industry for that type of instrument, and not just the tapping of the long end of the curve, let's say 2032 and longer. So we think it makes a lot of sense.
Amazing, the things that make people happy in different parts of the market. Let's wrap up, guys. Let me begin with you, Ian, in terms of your overall thoughts on that budget. Just gather your thoughts, guys, before I come to you. Ian?
I think it's a good budget. I'm wearing my bond hat again. I think from a borrowing requirement, the debt trajectory, what the minister has said, overall, I think it is a good budget for the bond market, for bond investors. There's been good things said. You're never going to get everything that you want, but overall, I think the minister is in a tight corner. He's made the right noises. The market likes it. We've seen it on the rand. We've seen it on the yield curve. And to me, it's all about the implementation. There's been good things said. Let's see if they can actually implement it.
Absolutely. Execution risk, as they say. Let's move through the ladder. Dr. Ntabiseng Moloko, I am going to ask you for your thoughts on summing, and at the same time, I'm inviting you to come back and we need to talk about what Tito ought to put in his budget next time to make sure that he gets growth.
Thanks so much. I think two things just for me, just to quickly close, just that we need serious macro reforms. I think the markets are happy, but I think South Africans are still unemployed. There's still massive poverty, and I think we're deindustrializing. So we really need to look at alternative ways to try and change the growth path, and I'll emphasize this because it's critical. You talk about Operation Vulindlela as a last point. I think that Operation Vulindlela doesn't necessarily deal with the proportion. You talk about nominal increments of money that is going to different infrastructure. The rollout of infrastructure as a proportion to GDP hasn't increased. There's been a public disinvestment over the last decade. So what we need to really look at is how do we productively crowd in investment from both private and the public side, but also target investment that is going to lead to agglomeration of industries and productive investment in manufacturing, but also redistribute. So I think the key element is how do we include how do we include new entrants, new SMMEs? And I think South Africa needs to emphasize that so that we see a difference in terms of outcomes. So I think the macro reforms are definitely a miss, but I think this is not enough to deal with the fundamental problems that we have had. And it's not going to take us to a pre-crisis different path. It's maybe take us to pre-crisis COVID, but this is not enough for us. So I think we need to do more.
As a lecturer, I suppose you are marking him under 5 on a mark of 0 to 10.
I won't say anything about that. I don't have the power to mark it. The president does.
I'd given you. Billy?
Yes, so I think from a tax point of view, it's a good budget. It's measured and fair, and all the talk of tax rate increases proved to be unfounded except for excise duty. I would emphasize the point made by Ntabiseng that growing employment, apart from being very important from a social point of view, it's also the best thing we can do from a tax collections point of view, because tax on individuals accounts for nearly 40% of our tax base. So if we can get more people in employment, we'll be collecting a whole lot more tax. And of course, those same people spend that money in the economy, and that contributes massively to our second biggest contributor, at just under 27%, and that's VAT.
Absolutely. Annabelle?
Yes, so look, I think, also something that's quite key. One of the things I did pick out from the budget is that its statement says we are already the fastest rising item of spending, now consumes 19.2% of tax revenue, and that's debt service costs. Debt service costs at 20% of tax revenue eats up a huge amount of tax revenue that can be spent on other areas as well. And I think, what's absolutely critical for South Africa, again, is this shift towards a focus on getting stronger and faster economic growth, more people in the employment net, certainly, but also to avoid this downward spiral we've been on debt from a debt trajectory. I think, to my mind, this budget is good in that it puts us on the path of trying to achieve debt, fiscal sustainability. But I don't think it's actually enough, because if you actually have a look at our debt levels, we are sitting at now apparently close to 90% from a peaking point of view of debt to GDP. But if you look at countries around the world, the average for middle income economies last year was 63%, emerging markets and middle economies, and we were sitting at 80%. And of course, the same goes for our fiscal deficit as well. Even at 14%, the average was 10%. And if we look at what is seemed sustainable for emerging market economies, it's actually a debt of 60%, debt level of 60% of GDP. So, it's an improvement on where we were, but I wouldn't laud this budget as a solution. I don't think it's going to result in us being able to eventually evade credit rating downgrades. But I think, as I said, that's probably stayed off for this year. But it certainly doesn't bring us the territory of upgrades. And the reason why that's important as well is our debt quantum is still too big. And our interest payments on our debt is still too big to make this a permanent, sustainable feature. And we do have to get to the point where we actually stomach the fact we're going to need to reduce our debt. And unfortunately, if we run into a few more difficulties like we did last year, it's going to throw us completely out of the ability to, manage to achieve sustainability. So certainly a lot of good components in the budget, but not yet a budget which is going to be sustainable for the long term.
Okay, so Tito and his team need to do more. I just wanted to end by reading this quote from his statement. He says, this is talking about Operation Vulindlela. Let's take away Operation Vulindlela and simply say that this is reform. And he says, we will not rest until we have fundamentally altered the structure of this economy by lowering barriers to entry, raising productivity, and lowering the cost of doing business. Has he done enough? As you heard from my panelists, he has started on it. There's a lot more work that needs to be done, and we need to do more. Thank you to all of my panelists, Annabelle, Billy, and Tabisang, Ian, thank you for your time. And